Well, good morning, everyone. Welcome to our Friday morning trading room. Hang on a second here. We'll get the screen share going on. Okay. An interesting start to the day. Yesterday's session, which remained bearish overall, did turn sideways and had a slight bullishness going into the close. And you can see as well, okay, so here was yesterday going into the close. And then you can see as well the overnight, very, very busy, which we have not seen for some time. So the market's really kind of stepping up again. I'm still in the June contract. You could roll out to September. I know NinjaTrader keeps prompting to roll out to the September contract. All right, so sorry, just taking a look here where the market left off last night, where we're starting. We left off somewhere around the 7160 zone. We're opening down here around where are we opening? 7120. So there's a rather substantial gap above the market at the moment. Mark doing well pre-market. Mark says I took another signal at 5 a.m. my time. Here we go. Must be this bad boy right here. Late filter entry signal on the Falcon. Now, for you Falcon traders, this is definitely a signal you want to keep an eye out for. The late filter entry signal occurs when the filter goes out of sync and comes back into sync. The trend line itself, however, never changes color. Mark says I traded 6 contracts on that, netted 750. He says I took a little heat, but patience paid off. Well done. Yeah, Mark says a guy can make a living just trading pre-market. Most definitely you can. The key, of course, to successful trading is picking your moments. This is something a lot of people struggle with. In fact, I just got an email from one of the new members yesterday, and I don't see that he's in the room here this morning. I was going to go over some of the questions that he had, so we'll see if he shows up this morning. Okay. Market looking a little bit more bullish here now, actually, after a quick little bearish start. Into the hard edge here, you can see the eagle. This is actually now our first in sync signal of the morning, this red bar buy, for those of you who like to take that first eagle signal. I do believe that's it right there. So we've got a couple things going on here right now. The eagle looking definitely a little bit more bullish. The hawk, trying to get bullish. As is the falcon and quite possibly the raptor as well. What time is it? Oh, we're only 7 minutes into the day. I think I'm going to wait just a little bit longer. See how they build from here. And you can see they're struggling a little bit. The hawk now back into yellow bars. All right, now everybody's getting a little bit more serious here, or trying to. The eagle, bullish. Well, the hawk still very, very neutral. The falcon, fairly neutral. But definitely the eagle and the raptor here looking a lot more bullish. Now, given the sideways nature of the market at the moment, I think what I'm going to do is I'm going to set a rather broad entry and keep my stops a little bit tighter. What I'm thinking here is that if the market's consolidating, and seeing how I've already missed the actual signal, I may as well wait and see how they react to this breakout right here. Okay, so at the moment, they're looking a little bit more bullish. Maybe they're going to try to get into that early gap from the morning. Hooray. Floyd, you also sent me an email the other day. I'm sorry I haven't had a chance to respond regarding Bitcoin futures, which markets I'm aware of. Honestly, Floyd, I haven't followed the Bitcoin that much. The only one that I'm really aware of, and let me just pull the site up here. For that sort of information, I always just go straight to the horse's mouth. And in that case, that means the CME. And I would search on the CME for Bitcoin. There they are. Let's see what we get. So there's the Bitcoin symbol, the BTC. And that's really the only futures that I'm aware of for Bitcoin. Everything else, as you pointed out in your email, would be ETFs. But as far as futures go, there you go, the BTC. So I apologize for not being able to respond to your email. I've kind of been run over here with stuff lately. So I hope that answers your question for you. All right, well, so much for a bullish run. It may just be early. It may just be a little premature. The eagle and the raptor still bullish. Actually, the hawk, a little bit more of a bearish tone to it now. And likewise for the falcon. Okay, here now the trend change signal on the falcon. We've already got the first micro macro cross here on the hawk. Overall though, is the market more bullish or bearish? That's always the tough part when you're trading. And perhaps the most important part, trying to decipher the market trend. Oh, look at that. Here they go again. All right, first micro macro cross in the hawk. Now we're sort of all in sync, just barely. But I don't know. Let's see. I do have a little bit of a second push on this signal. Very, very sideways. You know what? I'm gonna scrub that trade. For all my preaching about the importance of market trend, I guess I should pay attention to the market trend too. Honestly, very often the hardest thing for you to do as a trader is just sit there and wait for the right opportunity. We're all so afraid of missing a move that very often we get ourselves into trouble. Okay, here now, yet another number one signal. So to me, it's looking like things are definitely a little bit more bullish. This is going to be my just in case order. Because once again, I was a little bit late getting involved down here. I do need the deeper stop because, well, we're breaking the high of the morning, and we'll see here in a moment whether or not they have enough to keep this trade going to the upside. We should have a resistance line above us here. Yes, we do. The median line sitting at 71.43. Come on, get up there. Yeah, Joe says lots of hedging today between the June and September contracts. Lots of fun. Okay, the number 3 signal now coming off of the hard edge. I could think about rolling my stops up a little bit. I'm going to try to give this trade every opportunity. Come on, give me one more push. All right. Well, I think it's time to roll stops here a little. Wait a minute. What I'm trying to avoid is a premature stop out. The market conditions still very, very sideways, right? So I don't want to jam my stop in ultra tight, only to get tagged out early and to see the market continue higher without me. The whole point of using a tool like the Trade Manager is to control your risk at the outset so you don't have to panic about a trade. Come on, give me the break. Get up there. Here, we'll like to manipulate the market this way, but we're going to take the mouse and we're going to push the market higher. There we go. Come on, get going. Really? Okay, you're going to be like that, are you? So, time for me to roll the stop here a little bit. And I'm going to take my break even down as well. So next time, if the market makes another push higher here, I'm going to look now for an opportunity to take the break even on the trade. In fact, I may get really tight with the break even. So next rally attempt, here we go. If we get a rally attempt. There now the counter trend signal, the number 2 signal. And I'm going to roll my stops just here below the primary resistance line. Okay. Come on, get up there. Good morning, Nope. I'm glad you could make it to the room this morning. We'll go over your email here in just a moment. Come on, give me the break. Come on, one more tick. Here, I'm really going to pinch this trade hard now. There we go. Get up there. Okay. It's probably going to continue a little bit higher, but you know what? I'm okay with that. All right, so Nelp sent me an email the other day looking for some advice about the Raptor signals. Namely, could you show me how to identify a valid number 1, number 2, and number 3 signal on the Raptor, and why it is valid and why it is not? So we're going to take a few moments here and just do a little bit of a review. I expect the market is going to go a little bit sideways here after this attempt to push up anyhow, so this is probably a good time as any to do it. All right, so, excuse me. As you know, with the Raptor, we get these signal prompts. The signal prompts alert us to the high probability setups in the Raptor. And you can see primarily there's 3 of them. There's actually 4. I'll get to the 4th one in a moment. But then the question becomes, how do I know? How do I know which ones I can take and which ones I should avoid? Now, I touched on this a little bit earlier, But there's a few keys to successful trading before you even start taking signals. First and foremost, I think you need to come into the trading arena with the mindset that you're going to be very selective on your trading. Too many people come to trading with a production line mentality. They look at all these signals. They say, "Oh, well, look, there's a signal right here, and there's another signal here, and another signal here, and another signal here," and so on they go, right? And they say, and then they'll start pointing out the sell signals. Oh, there's sell signals here and here and here. And they think what they need to do is they need to take all these signals. No, that is not how you trade. In fact, Mark's a very good example here this morning about how selective you should be. Mark says, I'm 2 for 2 on late filter entries. I'm over my goal of $1,500 for the day, and unless another late filter trade comes my way, my day is done. Okay, so Mark's done after 2 trades. I know some traders who are done after 1 trade, because the key to successful trading is consistency. You go to any internet trading forum and they're always bemoaning consistency. Oh, if I could only be more consistent on my trades. They're not consistent on their trades because they're trading too much. All right, so first and foremost, you need to adopt the mindset that you are not going to overtrade. You are not going to be like 90% of traders and trade too often. So right away, that's going to eliminate a lot of the signal possibilities that your system produces. I recommend that you trade 2 or 3 times a day. It is very easy. Well, okay, easy is the wrong way. It's a much greater probability that you will be consistent on 2 or 3 trades than you will be on 10 or 15 trades. Chances that you can find 2 or 3 winning trades throughout the day is a lot higher than finding 10 winning trades on the day. The other key to successful trading is determining the trend. Muy importante, as they like to say down in Mexico. You have to identify the market trend. Now, unfortunately, the market trend over the last few days has been pretty tough, right? Here now, the daily chart, which I show every once in a while. This period through here was brutal. There was no trend. This was, for the most part, pretty difficult trading. Once you have a trend, however, the trading becomes a little bit easier. So just bear in mind that there's going to be days, or even sometimes a week, where the market is just in flux. It hasn't decided, it's not trending. You're going to end up producing a lot of signals, just like we are right now. And you need to be able to identify that and step back and say, all right, the market seems to be struggling a little bit. I perhaps need to be extra selective, or perhaps I'm just going to watch today. Maybe I'm just going to take it easy and practice my trading and just see how the trading works out. Which touches on another subject, that trading is like any skill. If you're learning a new skill, it's going to take you a little while to develop that skill. As many of you know, I love to play golf. It's funny because a few years ago, my wife started to golf. And she was frustrated with her progress because she thought, well, she should be parring every hole and, hitting 200-yard drives and so on and so forth. And I told her, when I started golfing as a teenager, I couldn't get the ball in the air for the first 2 years. Well, that's not exactly true, but you get my point. It took me a long time to become proficient. Now, I don't mean to discourage you. The reason we have the trading room, the reason we have the signal prompts is to shorten your learning curve, but just be aware this is a new tool. And just like learning any tool, there's going to be a little bit of a learning curve. You have to get familiar with the tool itself. And to that end, it's the nice thing about trading is it doesn't cost you anything to practice. So you can randomly grab your chart, you can roll it back, and you can play what if. What if I did this trade? How would it work out? Would I even do this trade? And so on and so forth. So you can dramatically shorten your learning curve by doing a little bit of homework, a little bit of practice as well. All right, so you're going to limit the amount of trading you're going to do. You're going to pay particular attention to the trend. Something that I like to do is if I have a signal pay off in one direction, so for instance, if I have a buy signal paying off, then I'm going to give more preference to the long side of the market. I'm going to avoid trying to sell it. And likewise, if I have sell trades work out, I'm going to avoid buying trades. So that's another way that you can identify the trend. So if we have something resembling a trend, probably the best way that you can avoid losing trades is to immediately eliminate all counter trend signals. So that means all your number two signals are you're gonna avoid. Any sell signal you're going to avoid. All right, but let's get back to the original question. What identifies a 1, 2, and 3, and how can I know which ones are the best? All right. The number one signal, here, let's go with this one here. The number one signal forms when the clouds cross over. Actually, this one's better down here. When your clouds cross over, your number one signal is your trend change signal. This is the equivalent of the first micro macro cross signal in the hawk, the trend change signal in the falcon, and your trend change signal on the eagle. So this shows you a band that has been bearish. The bands turn over. So I hope you can see that. Here we have a bearish band. So we have the soft edge below the hard edge. This is the hard edge here. And then it turns over. Now we have the soft edge above the hard edge. And when that turnover happens, it's usually followed by a pullback. This pullback is the seller's attempt to regain the market control. So the market was bearish, turned bullish. Now we have the pullback. We have the sellers trying to regain the market control. If the new trend is going to remain, we will come back and we will produce a buy signal. All right, so that's your number one signal. Number one signals tend to be pretty good signals for the most part. Now you're going to see back here we have a number one signal that didn't work out as well. Why did that one not work out? Well, probably it didn't work out because it was in the middle of the European session. You can see the market very, very sideways going into that. Normally with a trend change signal, I want to see a proper trend reversal. right? So here the trend was down. Now the trend is up. The clouds change direction, and now we come back and we produce a signal. So there is your number one signal. You need the clouds to cross, you need a pullback, and then you're going to get the trend change. Let's do the number three signal next because it's easier. The number three signal is a continuation signal. In order to have a continuation signal, you have to have something to continue, right? So there has to be something resembling a trend. I'm sorry, it's a little bit subjective, but if it looks like a trend to you, then it's probably a trend. So we have a bullish stack band. The market retreats to the hard edge, either the first or the second, it really doesn't matter. And then it comes out and it produces a buy signal. That is your number three signal. That is your hard edge bounce. Whenever the market encounters the hard edge of the trading band, we anticipate a reaction. Sometimes it's a big reaction, sometimes it's a little reaction, but this is your number three signal is, like I say, a continuation signal. So you come into the hard edge, it bounces out, there's your number three signal, and you, lo and behold, the market rallies up and hits the high probability profit target. The number two signal is your counter trend signal, and let's go here to the end. Oh dear, that's kind of messy looking. Let me find you a better number two, something that's a little bit more textbook. Oh, here we go. This one's pretty nice. Your number two signal is your counter trend signal. Again, before you can go counter trend, you have to have something resembling a trend. I think this is a pretty darn good trend going on right here. The market comes up, and now we get what I refer to as a test of the extreme. A test of the extreme simply shows you the market trying to regain the market trend, but unable to do so. So we have a trend, the market retreats, tries to resume the trend, and then it can't, and the raptor produces a counter trend signal. That is your number two signal. Now, as I mentioned before, with counter trend signals, the probability that the trade is going to work out is lower because it is counter trend, right? You're trying to sell into a strong trend. Normally, our profit objective for the counter trend signal is the hard edge. So if you set up the trade like this, you can see you're just a little bit above the hard edge. I probably would give that one a go, and there we go, we hit our target. When the market makes a full reversal, it can often lead to a very big move, as it did here. It went a little bit above our profit objective. But for the most part, be aware that counter trend signals are inherently more risky. Now, notice this signal that's going on here. Do you recognize this signal? This is an early number one signal. I call it an early number one signal because the clouds are not fully crossed yet. But for all intents and purposes, they are crossed, aren't they? The market went from a very deep bearish band, and now we have a bullish band, and we have the pullback. So even though this will not print as a number one signal, I would still deem it to be a number one signal. And I would probably try to take that trade. Remember, your number one signal shows you a trend change. Very often when the trend changes, it's to your advantage to get on that trend early. So the market gives me some heat. Oh, look at this, it's going to stop me out. All right, get up there. Come on, let's go. And, well, I finally get to get my trade to break even, which brings me now to my second point. It's actually good that worked out that way. Because here is the other key to trading, is not to strangle your trade, is not to place your stops too tight. This is a problem that a lot of people have. A lot of people, when they trade, they say, oh, well, I'm going to enter right here because that's where my signal is, and I'm going to put my stop loss right there. And then the market brings them in and stops them out, and they say, oh, this stupid trading system, it doesn't work. Well, yes and no. DTS and the Raptor are both very good at picking up initial market momentum. You'll see that very often when the signal prints, you get immediate momentum, but not always. So to that end, I always recommend that you keep your stops at least 2 swings back. And this is not something you want to micromanage. A lot of traders will put their stops right here and watch what happens. The market brings you in, comes down, hits all these early weak buyers, and look what happens after that. The market continues to tail off. What you want is you want to try to give yourself some staying power. 2 reasons. In case you're in too early, as I obviously am in this case, and you don't want to get stopped out prematurely, right? You don't want to get stopped out before the market has a chance to get to your profit target. By leaving your stop 2 swings back, so there's swing 1, there's swing 2, you give yourself a chance in case the market starts to move against you. And you can see I was able to hold on through all this. And then the market finally goes higher. So it's, or at least gives you a chance to get your trade back to break even. So it's important that you, like I said, give yourself a reasonable stop. The bigger the stop, the better. Remember, your stop loss is not a loss unless it gets hit. So you want to keep your stop as far away as possible and at least give your trade a chance. When you look at your chart and it looks like this, I would probably avoid trading altogether. This is just showing you a terribly conflicted market. So don't think that any of these signals are going to work out. When you see this, it's just time to pick up a book or go do something else. All right, here's a good time. We may as well roll into the next contract month. So I'll show you how to do that. If you're not familiar, you go to your control center, click on Tools, and then Instrument Manager. And you can take a look here at the contracts that are near expiration. Let's see. And all you do is you highlight the instrument and you click the right button and you click the left button, and it will give you the current month. So here's the E-mini. I click the right button, you see how it's moving to September. I click the left button, and now I have the new the current E-mini month. So we'll update a few of these while we're here. Natural gas must be due. Sure it is. There's the NASDAQ, the Russell. And I think that's it. Nope, those I'll do later, the currencies. Okay. And then once you have done that, make sure that you save it. And I always recommend that you save a duplicate workspace. That way you'll have, if the one file ever becomes corrupted, you'll have another one. You won't need to rebuild all your charts. Okay, so as a review, when you produce a signal, so here we've produced a number 3 signal. What questions do you ask yourself? Well, you ask yourself, is this one of the best trade opportunities I'm going to see today? So here's the number 3 signal. It's just printing. Do you think this is going to be one of your best trading opportunities today? If you're only looking to take 2 trades per day, do you think this should be one of them? Probably not. Question number 2, is there a trend? Well, there's a weak uptrend, but at the moment, no. I would not say there is a trend. How do you identify trends, you say? Well, it's quite simple. If the market starts in the bottom left of your chart and goes to the top right, you have an uptrend. If the market goes from the top left of your chart to the bottom right, you have a downtrend. Pretty simple stuff, right? If the market goes up and down more than 2 times on your chart, you have no trend. All right, so there's no trend here at the moment. One thing before we leave the whole counter trend discussion, the number 2 signal, let's go back here again. The other thing that made this number 2 signal very probable is the breadth of the cloud. We talked about this a little bit the other day, how when the cloud gets really, really wide, it's going to have a tendency to make a little bit more of a reversal, or it's going to have a tendency to reverse anyway. Maybe not a big reversal, but certainly a reversal of some sort. So here we are at 70.97, the bottom sitting around 70.92, or pardon me, 82. So what's that? That's about 15 points, 60 ticks, 4 points, 4 ticks per point. That's a very, very broad cloud. Anytime the cloud starts to get more than 40 ticks broad and you produce a counter trend signal, there's going to be a pretty good chance it's going to try to get to the hard edge. All right, so something to bear in mind. You know, we're getting a very, very broad cloud. Would I take a number 3 signal? This is not a number 3 signal, but we're going to pretend for a moment. Well, yes, I probably would, but I would be much more aggressive with my stop in case the market fails near the lows and tries to reverse on itself. The last part of the equation, I suppose, is the trade manager. It's restricting your risk exposure to an amount you can afford to lose. So here we're going to get, let's say we're going to get a buy signal, or you know what, let's just take one of these. Let's take the number 3 signal. Let's say you thought that this was one of your best trading opportunities today, and you took your number 3 signal. I would probably say this is going to be swing number 1. And again, don't micromanage. When in doubt, go back a little bit further. You want some proper looking swings. So I would probably place my stop down here. Okay, so trade manager says, all right, Eric, you want to do this thing? You can afford to lose $260 if you're wrong. And you can see, again, just by keeping a proper stop, I've increased the probability of my trade, even though it was a terrible, terrible signal. Naup asks, Eric, is there any strategy to trade zigzag trends like today? As you see, the market fluctuated, but overall the trend is up 200 ticks. Not all opportunities are equal in trading. Remember, this is not a production line. This is, you're not at the factory banging out widgets. There are times when you're trading where you can sit for hours and not have a decent trade to take. And then there are other days where the market trades are just coming so fast, you can't help but make money. So you just have to, again, you have to pick your moments, right? It's not a job per se in the traditional sense where you go to work, you get paid. No. In trading, you go to work, you may not get paid, and then to add insult to injury, you may even lose money. It may even cost you to be there. So forget about the overall, the market's up 200 points. We did get our opportunity early on. We got our opportunity here out of the open. Where was it? We took a number 1 signal. Yeah, right here. We took this number 1 signal. And again, it was because the market trend was up a little bit. There was a big gap above the market. Took the number 1 signal and it worked out nicely. Came back. I think I took the number 3 signal. No, I took another signal through here. I think maybe it was this one. Took a bit of heat, but it eventually continued higher as well. But no, when you hit this kind of stuff, step away from the computer, man. Just ignore it. There's nothing you can do. This is the big traders chewing up the little traders because they know the little traders are dying to get in here, right? You'll see these big moves, quick moves up, and everybody's reaching for the buy button. And then what happens is the market moves lower, and you'll see a quick move lower. Everybody will get excited and reach for the sell button. And shortly after that, the market will reverse and head higher. Oh, I upgraded my months, and I forgot to move into the September chart. Bear in mind, there are going to be days that you're going to miss the action as well. Oh, did I not save my changes? There's going to be days where you're just you're going to miss out sometimes. You're not going to catch every single move. You're not going to catch every single opportunity. That's just trading. You see, you see me do it. I'm not going to say all the time, but sometimes you'll see the market gets away on me. I'll miss opportunities, and that's just how it is. But so long as I can find a couple of winning trades a day, after that it becomes a game of multiples. Right? If you're trading a couple of times a day, and if you can make $50 on each of those trades, you've made $100 on the day. Well, if you can do that every day, just trade twice a day for $50, make $100, you will make $20,000 a year. Okay, $20,000, great. That's wonderful. But you say I can't live on 20,000. Well, then trade 2 contracts. That's 40,000. Trade 4 contracts. That's 80,000. You see, we're not trading more often. We're trading more contracts, and Mark will attest to this as well because that's what he does. He's trading 6 contracts now. He's got his account up to the point where he can afford to trade 6 contracts. But we all have to start somewhere, right? If you're only trading singles, that's fine. But your goal should be to find those 2 winning trades, make your money, build your account, and then graduate into trading more contracts. You know, we all start trading and we all want to be driving a Ferrari 3 months from now. It doesn't always work that way, I'm afraid. All right, I think I have the right, there we go. Let's load up the September contract now. Okay, now I'm going to put you on the spot here in a second, see if you've been paying attention. And honestly, don't be embarrassed by any of this. When I rarely put you guys on the spot, and girls on the spot, but this is a good opportunity to learn. All right, now that we have the September contract going. All right, so we've seen a breakout now lower. What's the next signal we're going to anticipate? Oh, see, Phil's already ahead of the curve. Phil knows what question I'm going to ask. So what's the next signal we're going to anticipate? Yeah, that's right. Way to go. Nope says a number 1 signal. Phil's already got it too. He says a number 1 or a number 3, depending how it sets up. That's right. We're going to anticipate a number 1 signal. Now, the trickier question, do you think it's going to be one of our better opportunities today? All right, so here now is the pullback. We got a pullback. We've got the warning dot forming, so there's a possibility of a trade here. Do we think it's going to be a good opportunity? I know, this is a tricky part, isn't it? What makes it a good opportunity? Well, do we think this breakout is going to stick? Right, we have this sideways trading range right here. Do we think the breakout is going to stick? Oh, Dan doesn't think this is going to be a good opportunity just yet. And honestly, folks, I'm asking the question, but there's no right answer here. This is why trading is trading, because traders have different opinions about what the market's going to do. The question is, what do you think? This is your money. What do you think? Do you think this is going to be a good opportunity? And like I said, there's no right answer here. So what I would use to determine, do I think this is a good opportunity? I would think, is this breakout going to stick? Is this breakout going to hold? Where's the low of the morning as well? All right, so the day started down here at 71.34. Currently, we're trading 71.38. So we're not that far off the low of the day either. Fortunately, we don't have the signal just yet. I don't have to decide. So I'm trying to determine, is a new trend developing? If I think a new trend is developing and the trend is going to stick, then I'm going to take the trade. If I'm not sure, there's a couple of things I can do to try to protect myself. The second push entry is a great way to get into a trade if you're not sure which way the market's going to go. All right, so see, we're getting the warning signal. Here's the number one signal. I can let the signal engage, and now I can let the market react. Fortunately, if it goes up here a little bit higher, there we go. Okay, so now it looks like the buyers are pushing back. I can use a second push to try to enter this trade. The last question you need to ask yourself is, can I afford the risk? If I think this is one of the best opportunities I'm going to see today, if I think this is a new trend developing, if I can afford the risk, I take the trade. And it's as simple as that. If you think you can afford the risk, you take the trade. And now you're in the trade, and the trade will do what the trade will do. You unfortunately will never have all the answers to the trading puzzle. There will always be some unknowns. But that's why we have, we're controlling our risk. We're limiting our exposure to the markets by only trading a couple or 3 times a day. And if you take, you should have a loss limit on the day as well. There should be a point in your trading where you say something's just not right on the markets today. They're not behaving the way they should. I took some good opportunities and the market went against me anyhow. There should be a limit. And again, it depends on you. Different people have different tolerances. It could be $500. It could be $1,500. Whatever amount kind of makes you sit upright and take notice. And like I said, the market is in a difficult place right now, and it has been for the last week or so. And here again, the daily chart. We had all this through here. Then we had a couple of rally days. Now we're into the contract highs. There's a little bit of a reaction. I could see the market come back down here to around the 70-50 zone. I think that's a reasonable expectation. but it's going to encounter buying pressure all the way because we had a very strong bull day here, another strong bull day here. The bull's still strong here and here, but you know they weren't able to do as much because of all the selling. Oh, Phil thinks we're going down to 71.27 or maybe 71.03. All right, Phil, let's go for it. Like I said, there's always going to be unknown variables, but the things you can do to protect yourself: don't trade when there's no trend. Be very selective about the trades you do take. If you're unsure, practice a little bit more identifying the signals. If you have in one of your practice trades a trade that does not work out, see if you can figure out why it didn't work out. If you can't figure out why it did not work out, you can send me a picture of the trade, of the chart. You can either email it directly from the program or save it and make some notes on it and send it to me. And I will do my best to answer. Tell me the time and of course the market that you're trading so that I can go to my chart and find it. But probably 9 times out of 10, it will be because you're trading counter trend or there is no trend. Most of the times, that's the reason your trade did not work out. Or your stops are too tight. That's the third one. If your stops are too tight, I get that a lot too. People writing me and saying, oh, well, I took this number 1 signal, but the market came up, stopped me out, and then went in my direction. Okay, what does that tell you? That tells you your stops are too tight. Okay, I'm going to pinch this trade really hard too. Come on. There we go. Hooray. Hooray for us. All right, so I hope that helps clear things up a little bit for you. Like I said, sometimes it's just a matter of waiting. Don't be afraid of missing opportunities. There is always another trading opportunity. I used to hate it when traders would say that to me, but it's so true. And they would say it whenever, right after I missed a big move, they would always say, oh, Eric, don't worry about it. There's always another trade. But I'd be so upset at myself that I missed that big move that I'd go take a trade, and then of course my trade would not work out. There is always another move. Your objective to start, I'm going to give you a goal to go 2 for 2. Find 2 winning trades every day. That's your objective. No more, no less. Just find 2 trades that you would put money on. If you can do that, you can quite literally make all the money you want. And no, I am not kidding about that. That is the true secret to trading. All right, gang, I'm afraid I need to close up the room a little bit earlier today. I need to head off to this big city today. If you are going to continue to trade this afternoon, well, the rest of the morning and this afternoon. I think we've established a new trend. We're now below the lows of the morning. You can see the buyers did try to rally up, ran out of steam. Now the sellers are pushing the market down. It is rollover day, so as Joel pointed out earlier, the market could spend a lot of time going sideways. And I think that's probably what we're in for. But right now, I'm definitely more bearish. So look for those pullbacks, and we'll see if we can't get another selling opportunity. Yeah, see, like Steve says, if I can find 2 winning trades every day, I can leave my job. From your mouth to God's ear. Well, honestly, folks, that is the key to trading. People who come to me for coaching, 99% of them are over traders. They're not making money because they're trading too often. Train your eye to recognize those best opportunities. They're in all the tools. You know, in the Hawk, we have our first micro macro crossover signal. Very, very high probability trade. Does it work all the time? No. There's actually one right there that did not work. Why did that one not work, you say? Well, let's take a look. Oh, well, there's no trend there. That's why it didn't work. But even, you know what, even if that didn't work, so you set up your trade, you give the trade a chance, maybe because market conditions are kind of sloppy, you choose to only take a single contract. Okay, you take a $170 hit. That's not the end of the world. Those are not the kind of trades that are going to ruin you as a trader. The kind of trades that are going to ruin you as a trader is when you hop on board every single signal instead of trying to be a little bit more discerning. Let's say you missed this first micro macro cross lower, and the market moves lower, and you're saying, oh, how could I be so stupid not to take that first micro macro cross? Well, guess what? You have another opportunity. You have macro pullbacks, you have 4 arrow consolidations. There's always another chance to get in. Like I said, train your eye to find those best opportunities. Don't go chasing every single signal. And it's not that hard to do, but it does take a little bit of time on your part. You're going to need to spend a little time on your charts. Just pull your chart back, look at the signal, decide for yourself, is that a good signal? Well, let's see, the band was very broad, and the market reversed, and we have a trend change, and now we have a hard edge bounce. Yeah, all right, that looks like it's a decent signal. I will risk $300 to see if that signal works. And then see what happens and record your results, whether they're good or bad. You're going to learn a lot from your losing trades, but make sure you learn something. As a trading friend of mine likes to say, education's expensive. So if you're going to have a losing trade, at least learn something from it. All right, gang, have yourselves a wonderful weekend. I am so looking forward to mine, and we'll see you Monday. Bye for now.